blockchain report. It's July 4th and Bitcoin's back down to 107K. And it might be because Crypto Quant says demand just dropped by 895,000 Bitcoin. Retail's missing and Saylor can't carry it alone. Arthur Hayes warns Trump's debt bomb could tip us to 90K before our run to a million. And Fidelity says Bitcoin's joining the new world order because what's more American than opting out? All this and more on today's show. Let's go! Good morning, my Bitcoin patriots, Solana airdrop holders, and everyone still waiting on Mt. Gox's refunds like they bought Bitcoin from Benjamin Franklin. I'm Hank Hudson, broadcasting live from the birthplace of venture-backed disruption and $12 toast, San Francisco, California. It's Friday, but not just any Friday. It's July 4th, baby! The day America declared independence from taxation without representation, only to invent capital gains tax and let Gary Gensler represent us anyway. And while the rest of the country is prepping fireworks, grilling meats, and confusing Litecoin for freedom, we're here, locked and loaded, ready to deliver the red, white, and blockchain truth. Now, before we cannonball into today's freedom-fueled FUD, hop on your digital Paul Revere and ring the bell and smash that like button, subscribe to RoxomTV, and follow me at Hank at RoxomTV on every platform not yet banned by the EU. Now, whether you're watching this from a lakeside cabin with solar-powered Wi-Fi, your dad's boat that was funded by Solana, or a Miami rooftop where someone just yelled, "What's the Wi-Fi?" Crack open a cold LaCroix, reload that chat GPT prompt, and salute your node, because today we're firing up the signal for financial sovereignty with liberty, volatility, and memes for all. But before we roast the institutions like a 4th of July hot dog, let's kick off this morning with our market rundown. Let's go. All right, it's the 4th of July, and let's hope the markets are bringing tidings of freedom and green candles. Let's take a peek. Right now, Bitcoin's still hovering beneath that 108K mark. Yesterday, we shot up to 109, even 110K briefly, but we're back down. Couple of factors at play there. Possibly a reaction from the big, beautiful bill passing. Some people think it's great for crypto, or Bitcoin specifically. Some not so much. The market's kind of telling the tale. Also, a huge amount of, there was a huge Bitcoin transfer this morning of over 10,000 Bitcoins that were held since like 2011 that were sold. So maybe that had something to do with the little price action we've seen this morning. But we'll go up to date. We'll update you on that just a bit. Ethereum, it's down this morning right over that $2,500 mark. XRP is down about 1.5%. Cardano's down 4%. And Dogecoin also down about 4% this morning. A lot of red as we start the day. In TradFi, it is 4th of July and the markets are closed, observing the holiday. But just a refresher from yesterday. Okay, the Dow Jones is up about $344 yesterday. The NASDAQ composite was up 1%. The S&P was up almost a percentage point as well. MicroStrategy, small day, up about $1.50. The same can be said for Coinbase. Tesla was down a very negligible amount. Nvidia was up almost a percentage and a half. And GameStop was doing what it does, sitting around $24 a coin. All right, we're going to go to Market Rundown with Luca, Chart Talk. We got Chart Talk with Luca. Let's hit it. Camera one, please. Bring them on in.
Oh, it's beautiful, Hank. This is not financial advice.
Luca, great to have you back, my friend. How are you on this Friday?
Hey, Hank. How's it going? It's a pleasure to be here as always.
Oh, it's a great day for freedom in the charts, although we've seen a little bit of a pullback for Bitcoin the last, 12, 24 hours or so. I'm wondering if it has to do with the big, beautiful bill going through the House or that big sale of 10,000 BTC by that unknown wallet address. What are you seeing in the charts this morning, my friend?
Yeah, I mean, let's kick in and analyze a little bit of the Bitcoin week because we couldn't meet on Wednesday. So let's make a little bit of a recap here, Hank. For me, I mean, the market has been making, after the push since April. It's been making since May a very nice of what could be formed as a bull flag, here. And in that sense, I think we've done some very pretty work on Wednesday that we couldn't meet, and on Thursday it's a little bit of a follow back. Right now we're pulling back onto the trend line of the bull flag, so the top of the bull flag specifically. So for me, this is a key area, to be honest with you, because if we're gonna reject this impulse pattern for a break of the bull flag, this for me is very negative in terms of Bitcoin. But there's still quite some time, today, for us to be bullish, or at least for me, this is of course not financial advice. I would love to see Bitcoin close today above $108,000. For me, that's the key point in the daily level. If we see very quickly the charts here, basically this would be the base of yesterday. If we can close back above here, so this would mean today, let's lower the time frame a little bit, this would be pushing up towards here. For me, that's a very, very good close of the weekdays, and us profiling to break the all-time highs.
So we're looking for a close at 108K by the end of the week. What do you think is going on right now? I feel like we've been kind of stuck in a bit of a coiling pattern between most recently like 105, 110, and I was expecting this, maybe the news with the big beautiful bill passing, to be a catalyst to finally bust through the most recent all-time highs of, what is it, like 111, 112. Yet
exactly.
We're not really seeing a lot. What are you reading in the charts? Are retail investors just not jumping in on the party, and we're relying solely on corporations right now? Or what do you think is going on?
Yeah, exactly. I mean, if we see this bull flag, we've been pulling back, as I was saying, on a three-way pattern, which is basically beautiful, honestly, with very low volume. So it's been quite boring, in the Bitcoin side of the world, which is actually healthy given this pool. We can't forget this incredible recovery that we nailed, Hank, together and analyzed day by day from April to May. I mean, we cannot forget about this, because it's very important to analyze. Hey, it's good to rest a little bit on this three-way pattern, but for us to continue, I think we need to close today at least above $108,000. With between that and $109,000, it would be awesome, because that's what would confirm us ideally this breakout. I'm seeing this bull flag here, Hank, with you, but we need some volume to kick in. That's the only thing that is getting me a little bit of an uncomfy vibe.
Yeah, no, that's understandable. Luke, I know we got only a little bit of time with you today, so before we let you go, I got to ask. We're at the beginning of July. July historically has been a great month for Bitcoin. It's like, of the last 12, 13 years, I think only like 3 of them have been in the red. What are your thoughts in terms of what we could be expecting by the end of July as far as Bitcoin's price goes?
Awesome. So I want to do a very, very quick analysis with a clean chart with you, if it's possible, for us to understand where could we go. So we see the naked chart here, and basically we had this push, right? And we have this, let's say, bull flag coming in, if we want to understand it that way, right? Let's do it for a second here with you. So say we're here on a kind of a bull flag pattern, right? And for me, the best way to analyze where we could head out from here is to drive to draw a Fibonacci trend. Okay, the trend starts here for me, right? We come back to the high point, right? We come back to the low point. Let's say this is the low point. For me, if we break this structure clearly on the highs, let's just really quickly map out our supply zone. We're still at risk here. Above $110,000, we're out of the supply zone. For me, this pivot here enables $135,000 of target. That's my analysis very quickly with you, Hank, on a top-down analysis.
That's spicy. That's a great way to wrap up this week. It's the 4th of July. We got freedom, and we all know Bitcoin is about freedom as much as anything. And we certainly appreciate you and your expertise in chart analysis each and every time we're lucky enough to have you on the show, Luca. So as always, thank you for your time today, and I hope you have an amazing weekend, my friend.
Awesome. The same to you, Hank, and all the team. Love to be here, so see you soon.
See you soon. All right, we're taking a quick break, but when we're back, we got a special guest joining us today that you are not going to want to miss, so stay tuned. We'll be right back with more Blockchain Report after this.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
All right, welcome back. And joining us for this morning's bull run, we got a real special guest for you. He's a guy who's not just talking about the future of finance, he is building it. He's the co-founder and co-CEO of Stokr, the platform that's turning regulated tokenized securities into $1 billion market and doing it all on Bitcoin. He's a legal mind, a pragmatic Bitcoiner, and one of the loudest voices pushing for open, decentralized capital markets in Europe and beyond. So please give a big Blockchain Report welcome to Arnab Naskar. Welcome, Arnab. It's so great to have you. And our audience here is thrilled to see you as well. How are you this morning?
I'm doing good. Great, actually. Thanks, Hank. Thanks for having me.
Oh, the pleasure is all ours. So for our audience at home that's not familiar with you and Stokr yet, give us a quick breakdown. Tell us a little bit about you, about Stokr, and all the amazing things you guys are doing over there.
Again, I think this is a fantastic day, and I think you have a great day also in US. It's the 4th of July, and I'm currently signing from Berlin, so it's kind of other part of the ocean. And the freedom is spreading everywhere, right? And I'm the co-founder and co-CEO of Stokr. Started Stokr with kind of another angle of freedom, the freedom from, the idea of capital markets freedom. Stokr is a tokenization platform. We tokenize financial assets, regulated securities, debt products, fund units, mezzanine products. And from 2020 onwards, we started focusing on issuing Bitcoin derivatives and Bitcoin structured products. And what's the best place to issue them other than the Bitcoin infrastructure, right? So we started looking into Liquid Network, which is a sidechain of Bitcoin. And we issued till date over 1.2 billion worth of tokenized securities. That includes tokenized hash rate, CMSTR, tokenized MicroStrategy, tokenized MetaPlanet. We have some funds in Luxembourg that is providing Bitcoin-backed loans. And we are also about to tokenize a convertible note of a Bitcoin treasury company. So doing quite some interesting stuff in the market.
Amazing. Well, we are so thrilled to have you on the show today, and we're going to get into a further deep dive about you and Stokr in just a bit. But first, you and I are going to go over a couple of our stories this morning, and I'm super excited to get your take. So hang 10, we're going to be back with you in just a second, because in the meantime, Arthur Hayes is out here giving us hope and anxiety in the same breath. The former BitMEX CEO says Bitcoin is still on track to hit $1 million, but before that happens, it might drop to 90,000. But why, you ask? Well, because President Trump's freshly passed big, beautiful bill is about to flood the U.S. economy with debt. The bill includes tax cuts and raises the debt ceiling, a two-step combo that Hayes says will force the Treasury to borrow heavily to refill its cash reserves. And when the government sucks liquidity out of the market like that, risk assets take the hit. So even though Bitcoin just popped above 110K just yesterday, Hayes says there's a real chance it dips to 90 before climbing back up again. Now, he's not calling this a collapse. He's calling it a pause, a brief detour before the bull cycle continues its climb. Now, in his blog post titled Quid Pro Quo Stablecoin, Hayes also drops a more ominous take. Stablecoins are becoming a government tool, not for payments, but for debt control. He argues that big banks may start issuing regulated stablecoins, not to help you buy coffee, but to buy treasury bills and plug fiscal holes. Private stablecoin companies, probably not invited to that party. And this is where crypto and US fiscal policies start to look like one awkward couple. But despite the volatility and government weirdness, Hayes is staying bullish. He says that macro trends like endless money printing and declining trust in TradFi are long-term tailwinds for Bitcoin. And by long term, he means $1 million by 2028. So while a temporary dip may scare some out of the market, Hayes is reminding us all that in Bitcoin, the bigger picture still looks like a rocket. All right, we're bringing in Arnab back. Arnab, tell me, Arthur Hayes says Trump's big budget bill could be bad for Bitcoin. In fact, he says that the US government's new debt-heavy budget could suck liquidity out of the markets and push Bitcoin down to 90K. Do you think Bitcoin is becoming too sensitive to US fiscal policy right now?
Look, Bitcoin has shown to 2025 that it's not correlated right now, right? As the correlation is like there are quite some time where the stock market's prices were going down and Bitcoin was still kind of keeping its momentum up. So correlation is breaking, and we believe that the politicians are becoming more and more fiscally irresponsible. If that's the belief we have, and that's the reality, actually, it's not only the belief right now, they will print more and more. And the current Trump's administration is definitely heavily interested to reduce interest rate so they can print more money because they have to finance a lot of activities, infrastructure, manufacturing, and all these things. How they can do it if the interest rate is high. So they have to reduce it. Now, as you rightly mentioned, if you reduce the interest rate, you're actually inviting a lot of capital to go to the risk assets, right? And what else better than Bitcoin to attract that, right? One interesting thing also you mentioned, which is very, very interesting here, is stable coins can be a big pulling factors or absorption factor of treasury bills. And this is very interesting because if you need to print trillions of dollars of stable coin or trillions of dollars of treasury bills or government bonds, who is buying it? If the treasury bills are going to the stablecoin market, why not pump the stablecoin market? And that we will see a huge macro push. That is, Trump, in order to push the treasury bill, he will kind of create a mammoth stablecoin industry that will be few $1 trillion. And that's what the market is heading. And if that happens, you will have an on-chain money that can actually go directly to Bitcoin. So yeah, here we are in the bull case for Bitcoin.
Yeah, and I'm glad you mentioned stablecoins because Hayes also warns in his article that regulated stablecoins might become tools for governments to control debt rather than payments. Do you share that concern, especially as someone building regulated financial infrastructure?
So look, the stablecoin market will be primarily supported by government in US, I see. On the European side, I think the European Central Bank is a little bit hesitant on stablecoin because they want to protect their retail bank market. But in US, they're pushing for that. If they're pushing for that, that will be the market they will go for.
And if governments were to push out private stablecoin issuers in favor of bank-issued versions, what does that mean for innovation and decentralization in the broader crypto ecosystem?
I don't think at the moment government is really interested about decentralization. It may be, kind of a very wild statement to make, but that's what it is. What they are caring about at the moment is where the demand of the treasury bill is coming from. If the demand is coming from the governments, it is. But I think a lot of nation states will start, pushing the stablecoin or the treasury bills in the market because the US government is kind of losing some trust anchors with the tariff war and all these kind of things. But on the other side, US dollar will be still used as a currency for international trade. And for that, you need a currency that is a payment currency. And what else better than stable coins? Now, this is it's a $1 billion question. I don't know the answer where the market is heading for. Will it be a bank issued stablecoin that will grow, or it will be privately issued? I think it will be both because the government doesn't care where the absorption comes from. They care about issuing it, right? As long as there is a demand and there is a kind of a borrowing that can happen, they're happy with it.
Yeah, well put. I think I agree with you, and it'll be interesting to see how this all plays out, especially after we had the big, beautiful bill passed just yesterday. I think we're still waiting for Trump's signature of approval, but I think we all know that's going through. So we'll have to wait and see, but well put on your end, and I will be curious to see how this all plays out. Hang 10, we're going to be right back with you because we got another story I want to talk with you about. As Fidelity's Director of Global Macro, Jurian Timmer, says Bitcoin might soon be part of a new world order. No pressure there. According to Timmer, the US dollar is in a sustained downtrend, and if that keeps up, it could supercharge demand for assets like commodities, non-US equities, and yes, of course, Bitcoin. The dollar recently posted its worst 6-month performance since the 1970s, specifically since 1973. The year Nixon killed the gold standard. So we're officially entering sequel territory now. This one's called The Fiat Awakens. The euro is up 14%, hitting multi-year highs. The British pound is also on a tear, hitting a 3-year peak. All the while, the Fed is expected to cut interest rates. That cuts into the dollar's appeal and opens the door for alternatives like gold, or as Timmer suggests, its shinier, sassier cousin, Bitcoin. Now, gold is still outperforming BTC in 2025, but Timmer thinks it might be time to pass the baton. He says the gold to interest rate correlation broke years ago, and now it might be Bitcoin's turn to take the lead. Now, as of Thursday morning, Bitcoin was trading at around 110,000, less than 2% away from its all-time highs. So while the dollar keeps slipping, Bitcoin is knocking on the door. And according to Fidelity, it might be ready to walk right into global financial reset. We're bringing back Arnab. So, question. Fidelity says we're entering a new world order where Bitcoin could play a major role in global finance. Do you think we're actually headed toward a future where Bitcoin sits alongside traditional reserve assets?
It's already happening, right? It's already happening. This is where we are, right? We have all these nation states, sovereign wealth funds, like in Abu Dhabi, like in Bhutan, like in El Salvador. I would say more and more emerging countries they will adopt Bitcoin in their balance sheet. It's not a company, right? So it will be their treasury, right? And this is where it's happening because Bitcoin is the first private money in that capacity we have seen in the market, right? And as more and more we are kind of questioning what money is in terms of the debt-backed money is, how much sustainable the debt-backed money is, we're looking for a hard asset. Gold is a hard asset. That's the reason we are seeing a lot of growth in the gold value in the last couple of months, primarily in the last couple of months, what we have seen, right? But on the other side, you have the Bitcoin. And the Bitcoin, as I mentioned previously, the correlation is changing, right? It's not directly correlated to the traditional market. Its uncorrelated nature is very much attractive. And on the other hand, Bitcoin is finite. It's not infinite, right? You cannot go and print endless amount of Bitcoin, which with the dollar you can do, right? So that's where it is heading. On the other side, I think one interesting angle, which I'm seeing more and more institutions are talking about, they understand that Bitcoin gives the ownership right, the property right, right? So different countries, and this is where it is going on, if you're custodying the BTC, you get the ownership of the BTC. If you custody a building in London and you're based in New York, you don't have the physical possession because the physical possession is based in London, right? The property right that gold gives is coming to the Bitcoin. So that's, I think, one interesting angle. Like it's the same principle as we say, not your keys, not your coins, right? This is very much important. The third thing, which I think is very important and where I see the market is heading, every kind of asset would like to try to, I would say, outperform Bitcoin in a certain way, primarily the alternative assets, right? And this is the reason we are seeing a lot of funds, actually real estate funds, different kind of asset-backed funds. They're putting Bitcoin in a small proportion to really create kind of an exposure where they believe that Bitcoin performs, that fund performance will also be increased. So I will see a lot of experimentation going on in the institutional space right now with Bitcoin as an asset class, because what we have kind of unlocked right now is just some tip of the iceberg. The huge portion is still beneath the surface for us to see.
Yeah, I agree with you. And you mentioned, corporations are now using Bitcoin in lots of new ways. We're seeing new products built around it. And with the US dollar weakening and fiat uncertainty rising, are you seeing growing interest from asset managers or other institutions in using Bitcoin as a hedge or foundation for these new financial products?
I think one of the major financial innovation we have seen in the institutional space was the MicroStrategy one, right? How a company with, I would say, 500 million to like in that size of the revenue, they currently are over 100, I think 10 billion worth of the market cap, right? And that happened by a very intelligent use of Bitcoin as a treasury product and accumulating Bitcoin in the balance sheet, right? And based on that, we see kind of plethora of companies globally adopting the Bitcoin treasury. We are seeing, H100, you are seeing the blockchain group, you are seeing the MetaPlanet, you are seeing the likes of Semler Scientific, and all these players coming from different parts of the world, Nakamoto, and all these players, they're experimenting different forms, trying to work with different kind of currencies, and this currencies exposure, like MetaPlanet did in the Japanese market, you have the blockchain group in the French market, you have different exchanges. And this will be creating an interesting way of, exposure for institutions into Bitcoin, right? But on the other side, you have also vanilla products, right? You have the vanilla products like Bitcoin ETF. They're one of the best performing ETFs and the largest ETFs by the growth of the ETF. That's massive, right? That it did in the last couple of months, I would say. This we have not seen in the normal ETFs market. This we have not seen in the other asset class. But this shows that institutions are eager to get exposure to Bitcoin in different forms and different alphas they would like to generate in different ways. And now the question is how it develops. This we will see more and more as we enter kind of different halving cycles of Bitcoin. The maturity of the ecosystem will grow.
And you mentioned corporate treasuries. That's a super interesting one right now. Like you said, MicroStrategy's kind of written the playbook for that. And now we're seeing all these other corporations jump on board. But I will admit, it gives me a little bit of pause because you see companies like MetaPlanet, which I believe was a hotel, right? And they're raising tons of money and kind of changing their whole business model to become a corporate Bitcoin treasury. And you're seeing it with companies that are worth only a couple $1 million, raising sometimes up to $1 billion. Is this sustainable over the long term, or are we going to just kind of have to wait and see how this plays out? Because we're certainly in a lot of new territory here.
Totally agree. I think the skepticism is quite rational. A lot of people have it, and there is a reason because we have seen a plethora of the ICOs and those kind of market that has been, influenced the crypto market or digital asset market for a long time in a good way, but less than a good way, more than a bad way in that sense, right? And people have that skepticism that is coming into what happens to the Bitcoin treasury companies if there is a fallout. But what we need to really understand is most of these Bitcoin treasury strategies are simple buying and hodl, right? They're not creating different exposures. They're not selling an options contract. They're not doing those kind of, crazy fancy financial instruments yet. This is the reason I say yet, because we don't know what will happen in 10, 15 years, right? It's always we do not know, right? But as of now, most like if you consider the MicroStrategy playbook, as of now, you're just holding in the balance sheet, growing the shareholder value. And if your KPI is Bitcoin per share, that's an interesting metrics, right? On the other hand, what you're also unlocking here is different region of the world has different inflation, different currency risk, different FX risk, different public market interest, different kind of speculators or different kind of hodlers in the market. And you give them exposure in their own currencies, in their own turf, in their own jurisdiction, how they understand. And that may create, I would say, different absorption of BTC in different markets, which is quite good, interestingly, right? What you're creating, you're not letting a huge banking institutions to gobble up as much as BTC, but you're creating those treasury companies will effectively, if we go into that, and that's kind of one theoretical angle I'm going, if you see this way, those kind of institutions can end up being a banking institution, a Bitcoin denominated banking institution. That will be a different world order we can think of, right? So as long as those promoters of those companies, or the founders of the companies are still considering those BTC as a part of treasury, not selling the BTC, but much more kind of acquiring more BTC in a legitimate way, in a way that gives the shareholders value, that give all the stakeholders value, I think there is less risk. But what can go wrong? The go wrong is and this is kind of, I'm seeing to a certain extent, if you have an operating business that is very much thriving, right? And you're taking a Bitcoin treasury, maybe there is a class action lawsuit, right? Maybe there's some legal case that goes against that company, right? For their operating business. And those proceedings of the case can actually take this Bitcoin treasury as a honeypot, and they would like to take the BTC out as compensation and all this kind of things. Then that operating business can actually be a liability for those Bitcoin treasury companies. It's a different way to think, but I see there is a merit to that. And that's kind of a lot of institutional investors are also seeing that way. To a certain extent, not having a business in treasury companies to a certain extent is or may be useful.
Yeah, that honeypot theory is super interesting. I'd never considered that, but yeah, we'll see how that plays out because that could be a liability to Bitcoin if people start suing these companies and then their Bitcoins are at risk. So we'll see. Last question, then we're going to take a quick break because I'm excited to get into our deep dive with you. Do you think Bitcoin has finally reached a point where it can credibly replace gold as the preferred store of value for long-term investors, especially in tokenized capital markets?
I think Bitcoin is already a part of portfolio for majority of the investors who does not believe in the current nation state order. I'm going in a very pragmatic way over here, right? And this, I think, more and more as we are kind of in the era of global uncertainties, right? The trust towards the current financial infrastructure is decreasing day by day and generation by generation. And Bitcoin is coming as kind of certain way to answer this problem that debt-based money cannot work. We need to think of a new form of money, and Bitcoin is an energy-based money because you have to burn an energy to create a Bitcoin, right? Bitcoin cannot be created by staking something or, by proof of stake model or something like, Fugazi kind of structures, right? You have to really burn some energy to really create a Bitcoin. And that creates a lot of legitimacy because you need to convert something to get something. It's the law of physics, right? And more we are kind of maturing in the Bitcoin space. We are understanding that to mine a Bitcoin, it's not because you're just controlling energy, you can do it. You need a lot of different factors that creates an equal play. Now, maybe the equal play is not based on if you're an individual, you cannot mine as efficiently as you could have done a few years back. But as an institution or as a nation state, you are getting more and more efficient to be a Bitcoin miner. And this is why we change. So I would say these kind of factors are making Bitcoin more and more attractive for a lot of institutions. And we see this is where a lot of savings people are for the life savings, right? We are seeing in emerging markets like Argentina, in Turkey, in any place where the inflation is super high, right? So people based in Europe or US may not see it on an immediate basis, but there's a huge portion of the global population living in that high inflationary market where the valuation of the national currency is decreasing day by day. For them, Bitcoin is kind of an exit or kind of a way for them for retirement or for savings or something like that. And this has a tremendous impact culturally, societal way. But on the other side, this is also creating a new capital markets order, a financial markets order that will be unwrapping itself in the next 15, 20, 30 years.
Yeah, well put. I mean, I think that's part of the adoption problem maybe in the United States as opposed to some other nations like Argentina, for instance. It's like when you have the national or international reserve currency, Bitcoin doesn't mean quite the same thing to you as it does when your currency is being debased every month at insane rates like we're seeing in Argentina and other countries. So I think you make some really great points there. And we're going to take a quick break because when we come back, Arnab and I are going to sit down and talk about him, Stokr, and a lot of other amazing things. So you're going to want to stay put. We'll be right back with that and our deep dive in just a sec. Stay tuned. All right, welcome back. It's time for our deep dive with my good friend Arnab. Arnab, I want to kind of talk about your journey. You've had a really interesting background and journey to get you where you are today with Stokr. So I kind of want to start at the beginning here. What first pulled you into the world of, I think it was finance and then law and now crypto? What has that whole journey been like for you?
Of looking into finance and then to crypto, right? And primarily in Bitcoin, right? So just to kind of give a quick background about me. I started working as a lawyer. I studied law in the past and I had the legal education and I entered the Bitcoin rabbit hole in 2014. And it's a very interesting way how I entered Bitcoin was playing games. And I was buying BTC by converting the Steam keys. And that's a funny part of my life when I was kind of playing some games and importing some mousepad from US using Bitcoin as a currency. So that's my exposure to Bitcoin as a P2P cash. So it's a funny story, right? And then 2017, 2018, in that direction, I met some fantastic people in the space, coming from the legal side, coming from the tech side. And the idea we started exploring was if Bitcoin or any digital assets can be kind of a store of value, can that asset be also a place where the securities can be registered or securities can be traded, right? And the theory which was not very concrete that point of time, but over the time it became concrete, is gold never had a settlement layer. gold is a store of value, but you cannot settle. There is the on-chain gold layer, right? You take hold of gold physically and you move, that's it, right? But Bitcoin is a store of value and Bitcoin has a settlement layer. Now, if you can connect these two things, can you actually issue capital market securities like shares, like bonds, like all these products on-chain on Bitcoin layer? And that can be a very fantastic instrument, right? Because now suddenly you're valuing Apple shares in Bitcoin terms. Suddenly you're valuing gold in Bitcoin terms. Suddenly you're valuing Google shares or any kind of debt products in Bitcoin terms. And that's kind of, I'm seeing fundamentally, we will see a lot of innovation, and that's we wanted to do it. And that's Stokr started his journey in 2018, going in that direction.
Interesting. So you said you got into Bitcoin initially through games online. What were these games? Are you betting Bitcoin in these games, or is it like you buy Bitcoin to play the games? What was that like?
It was like simple games, like simple games that are fun to play, like Counter-Strike, right? I was a big fan of Counter-Strike for a long time, and you play Counter-Strike over Steam, and you get keys, right? The keys are the currencies inside the Steam, and you can convert them. And there were a lot of P2P places where you can actually buy BTC using the keys, because keys were valuable, right? And people there is kind of an unofficial trading market for a long time, and I'm not following that market anymore. But I wanted to buy some mouse pad from US, and being in India, I didn't have a credit card at that point of time. I was quite young, and getting a credit card in India, that era was very hard. So I started kind of looking what is the alternative way. And yeah, some guys were taking Bitcoin. And what Bitcoin is, I had no clue, right? I never read the white paper at that time, right? It was just somebody said, hey, you can convert the keys to Bitcoin, and with the Bitcoin, you can buy some mouse pad. And I did it, and it worked. The shipment delivered. So that's kind of like, sometimes you don't need to know what the product is, right? You need to use it. You need to understand the use case, and then you enter the rabbit hole. And for me, that happened actually. After that, I started entering the rabbit hole, what Bitcoin is and why it was so easy and why it happened like that way. That I started understanding a bit more. And still I'm learning, right? Still I'm learning, right? Still, I think the entire market is trying to understand what effectively Bitcoin is.
Boy, that must have been fun to tell your mom. See, Mom, you said those video games are a waste of time. Look at me now. I'm an early adopter of Bitcoin. So did you eventually then, after you'd kind of used Bitcoin through video games and other methods, you said you met some really smart people around 2017. Was it then you took a look at the white paper and it all kind of started to click for you in like a different way where you're like, this really is something?
Yeah, like the Bitcoin white paper is still a piece of document. I think it's not just a tech document, but it's actually a political thesis. It's a philosophical thesis. It's a statement. It's an economic document, right? And more and like I try to read occasionally, time to time. At least the first page. The more into go to maths, I get lost myself. I'm not a math expert in that sense, but try to understand the philosophy behind it, and that unlocks a lot of things over the time, right? So for me, the kind of, I would say, aha moment was when I started understanding that in Bitcoin, you have the property rights, right? When you hold the BTC in your wallet and you hold the private key and you have the private key, public key pair, you are in control. You are not giving the control to somebody as long as you're holding. And that's maybe complex for a lot of people. The people say, okay, my grandma cannot hold. That's fine, but grandma cannot also use your lot of other activities that we are doing right now, right? So people learn, people evolve, right? A lot of people maybe 100 years back will also not knew how to use username and password, right? But people now understood, right? So if there's a lot of learning that goes through. So for me, I started understanding the value of Bitcoin, the property rights, the understanding of energy, and the scarcity is also Bitcoin is not about 21 million Bitcoin, but also energy is a scarce resource, right? And how this scarcity is also transitioning there, that opened a completely different world for me.
You mentioned energy twice now as it relates to Bitcoin, and it got me thinking about something that I'm kind of feeling stupid that I never thought about this before. People ask, people that are no coiners still, what is Bitcoin worth? Why is it worth anything? Is it worth something because of the energy? Because there's that saying, right? Energy is neither created or destroyed, it's always transferred. So Bitcoin's value lies, is it in the energy that is used to validate and create it? Does that make sense?
Look, the consumption and as a human evolution, we will have in, let's say, in a few millions of years, if we live or if we leave the earth or whatever the situation will be, we will consume more and more and more and more energy, right? And the cost of consumption of the energy will decrease or maybe increase, but the volume of consumption will increase, right? And the Bitcoin perfectly fits in the narrative, right? The network gets more and more secure as more and more energy helps them to get secured. Now, if you think this way, if you're mining the Bitcoin in a basement in 2010, 2011, 2012, in that era, the energy infrastructure that you required to secure the network was much more lower and small. So effectively, the energy efficiency gives the value to the Bitcoin. The ASICs, that's also an energy component, right? You cannot create an ASICs infrastructure without energy, without innovation. So all these thing factors, when you combine, you kind of get an intrinsic value. This value is very hard to derive, but there is an intrinsic value because you're burning something. You're burning an energy. You're burning this ASICs. You're burning those infrastructures and creating a value. And that value is then traded over next till the time I would say the Bitcoins are lost, right? It has a value till that, right? So that value gets passed on and that value kind of gets absorbed. So I would not say it starts with zero value, right? You cannot mine a Bitcoin with zero value. It starts from somewhere, and that's the starting point of that value.
Awesome. I really appreciate you breaking that down. That was a really good explanation of it. Now, through your journey, you said 2017, I think it was 2017, 2018, 2019, you met a group of people that really helped you get deep into the space. Was that around the time that, or was that kind of what inspired you to eventually co-found Stokr? Like, and how different was that world back in 2018 compared to everything you're seeing right now?
Yeah, 2017, everybody was trying to avoid, the Howey test. That was like, I think suddenly a huge portion of population of crypto became securities expert and securities lawyer, right? They were trying to avoid the Howey test. They were trying to avoid the securities law in US, and they were started doing all the ICOs, right? After Ethereum ICO, we saw kind of a tsunami of ICOs in different markets. And our question was, why to avoid securities law, right? We have a huge portion of capital markets, that's a big chunk of the global financial system, which are existing. Why can't we bring them into tokenization world, and right? And that was the question. That was kind of the thesis where we started that time. So instead of going for this crazy rat race of, hey, let's create another ICO coin, and just to give you context, Stokr was in 2017 in the market. We could have done a token issuance. We never did in that route, right? Because we never felt there is a value of creating your own shitcoin that somebody can use to invest on your platform. You can invest with a stablecoin, invest with a Bitcoin, or you can invest with fiat, right? So we don't have to create something to create kind of an artificial demand and supply and all these things. So we stayed in our lane. We tried to create a product that people use, and there is a value of that product. That's how we built. So we did not go into the rat race of creating kind of an ICO coins, rather trying to look into how we can create a capital markets product. And also, if you consider that 2018, there was no way to create infrastructure products on top of Bitcoin, but it was very vanilla layer one. And Bitcoin should be layer one, right? The entire idea of liquid lightning, it came quite later. And as it came, as a company, Stokr, we adopted. So that's how our journey has been till date.
Amazing. And okay, I gotta come clean with you here. My mother watches this show. I don't know why, but she does. And some of this stuff is a little new to her and a little over her head. So for people like my dear sweet mother out there who've never heard of Stokr until today, how would you go about explaining that to them in the simplest terms possible in terms of what you guys do and everything that you have going on over there currently?
So in simple sense, when I explain somebody, okay, what Stokr does, I try to give them a vision. So imagine you're holding your Bitcoin in a pen drive, right? And in that pen drive, that's the Bitcoin stick. And you need to understand that element, right? Or else I will lose that person. So if you understand that element, now imagine your shares and bonds are also in the same Bitcoin wallet. Okay. That's the beauty of the ownership. Now, in the current era, you have the brokers and all these accounts and everything. You don't own anything. Ownership is not there. You're relying on those third parties, right? But that's the ownership concept we are bringing. That's what Bitcoin gave, right? If you bought the Bitcoin in New York, you go to Hong Kong, try to borrow against the Bitcoin, you get the same rate or same dollar value of the BTC as you will get in any part of the world, right? The same is the
Right.
capital markets product also require that cross-border element. So what we try to do effectively is bringing back the ownership. Because if your mother has been watching, she is aware about bearer shares, bearer bonds, those era. That's gone because of regulations and there is for obvious reason, right? What we try to bring using the technology, that concept of ownership back without giving this idea of hey, you can do without KYC, without AML, because these are regulated financial products. You have to do KYC for legal reason, right? But that doesn't mean you have to give away your ownership right. So these two things. So that's kind of philosophically, I would say, we are giving back the ownership concept of properties, which is shares, bonds, and everything, back where it was a couple of 100 years back, but in a digital environment.
Amazing. Well, I appreciate you breaking that down. And my mother, on behalf of her, she says thank you because she doesn't understand like half the stuff that we talk about on this show. So I appreciate you bringing it down to layman's terms for us. You guys at Stokr right now, pretty exciting times if I believe so, right? You guys just passed $1 billion in tokenized asset volume, which is a massive milestone. Congrats.
Thank you.
What does that milestone really mean for you and the Stokr team at this point in your journey?
So that's kind of, we have been working hard, very hard for a long time in this space, right? As I mentioned, we started in 2018. It's kind of, we feel like we are a Jurassic era dinosaurs in the space, right? We have seen cycles after cycles, but it's been not that much years. If you see from traditional finance plus market, it's 7 years, right? And, but considering the fact what Stokr kind of meant and what we tried to build was, if Bitcoin is a 2 trillion plus asset class with above 100K BTC price, it's in that phase, we will have few 100 billion of derivatives, structured products, and those can natively be tokenized on the blockchain. And if on blockchain, why not on Bitcoin blockchain, right? And that's how we started experimenting with the blockstream mining issued tokenized hash rate that is right now around 640 million AUM. It's one of the leading tokenized securities in the space that paid 80 million in Bitcoin last year to the token holders or the hash rate securities holders. And what we are quite proud to actually identify those kind of opportunities for the investors audience and to tokenize them and bring to the market, right? Because a lot of this kind of products that you see on Stokr, these are effectively products hidden inside the private banks. And access to private bank, as you know, even if you have access to capital, is very limited, right? So what we are trying to open up is open up the access from those private banks on Stokr platform. It's still not very much retail focused. It's still very much high net worth investors focused, very much contrarian entrepreneurs kind of players are using the Stokr as a platform. But these players are also believing in Bitcoin and also understand Bitcoin and where the Bitcoin is heading, right? So we always have a great time to deal with or interact with our customers because they're all contrarian. They're all kind of, I would say, Bitcoin orange pilled. And they're always looking for interesting products that they can create on top of Bitcoin without fundamentally sacrificing the Bitcoin ethos, right? And that's what we are quite proud of. So when we reach this and we announce this 1 billion kind of milestone for us during the Bitcoin Vegas, we received tremendous amount of interest from people to understand, hey, we have heard about tokenizing real estate assets and all these kind of things, but never heard you can tokenize the hash rate. Never heard you have tokenized MicroStrategy, which I can trade now against Bitcoin pair, or never heard I can invest in a Bitcoin denominated lending, fund, which provides loans against BTC also. And this excites us because this excites means we are creating this kind of product for the people who are looking for it. And on Stokr, people can invest with BTC, people can invest with stablecoins along with fiat. And this kind of audience are looking, hey, I want to live on chain. And my on-chain balance sheet is, in stable coins, in Bitcoin, but I cannot invest with the on-chain balance sheet in traditional finance products. I have to off-ramp, on-ramp, and all these things. And their Stokr becomes for them an option that they can, without on-ramping, off-ramping, they can directly invest with stable coins or Bitcoins with the product. And in return, they can also get the Bitcoin as a return, right? They don't get the dollar as a return here. Like we have the mining bond that paid out last year, as I mentioned, 80 million. 80 million was paid out in Bitcoin that was mined, right? It was not a dollar converted. And people love this kind of things because they're looking for different way of accumulating Bitcoin. And that's what we are excited to create, what the market on this kind of players are looking for.
That's amazing. I mean, it's a great business model too. See what people want and then give that to them. And it sounds like that's what you guys are doing over at Stokr, which is incredible. And you mentioned tokenizing hash rates. I believe I read that you've originated over 400 million in hash rate backed debt products, if I read that correctly.
Yeah.
What kind of demand are you seeing for this kind of exposure right now?
So we are seeing like the Bitcoin miners have traditionally received a lot of loan against ASICs as collateral. But ASICs, or the mining infrastructure ASICs, are not a very efficient tool. Why it is not? Because over the time, what happens is ASICs decrease in value, right? There's a depreciating factor. You can do a linear depreciation, or there is sudden, but it depreciates, right? So imagine you have a collateral and you give a few $100 million to an infrastructure player in the Bitcoin mining, and you take the ASICs as collateral, and your collateral value is decreasing. Doesn't make sense, right? And if there is a default, you have to be suddenly a Bitcoin miner, have to have all the operation capacity to mine. So we kind of changed the game a bit. We said, okay, that's good. You start with the ASICs, but you also get a percentage of the mined Bitcoin as collateral, right? So over the time of the product is a few years, you get the ASICs as collateral, but as ASIC is depreciating in value, you also get the mined Bitcoin, which actually is opposite. It is appreciating in value, right? So your collateral is getting adjusted, and for the lot of lenders, large hedge funds and others, this is a very sophisticated instrument, and they love the innovation that we did, and that's helping a lot of miners to raise capital primarily. So instead of kind of relying purely just in ASICs as collateral, now the hedge funds are taking the ASICs plus a right to certain percentage of the mined Bitcoin, and that giving them more comfort than in the traditional way of just lending against the ASICs.
Interesting. And as you mentioned, you're kind of, what's the phrase you used? You're kind of changing the game a little bit, right? And whenever you're changing the game, as we're seeing with Bitcoin, you got to be laser focused on regulatory compliances, right, in order to get people on board. And I got to imagine, like, what are the challenges that you have faced navigating? I think that's called the VASP framework in Luxembourg. Like, what's that been like? This sounds like a huge headache.
Look, we are in the space where the regulation will be more and more and more forthcoming. And I think that's for good, Rick, because we have also seen in the market a lot of scams, right? I'm not necessarily saying that because of regulation, there will be less scams or no scams, right? We have some of the prime examples of scams after they got regulated also. But I think what is effectively going to happen is a lot of regulatory regimes will be harmonized to traditional finance. So a lot of institutional money can flow into the space, and that's what we are seeing with the Bitcoin ETFs and likes of those things, right? So Stokr, from a very beginning, we realized, and we kind of coming from the legal side also, my other co-founder, Tobias Seidel, he is a Luxembourgish and German qualified lawyer, set up a very well-renowned law firm in Luxembourg, has a very strong understanding of legal stuffs. My background, my other co-founder, who is purely tech, we kind of understand that tokenization market, and when you're tokenizing financial markets products or capital markets product, you cannot avoid regulation. But what we need to do is we need to educate the regulators. That's what we did. So Stokr, for a long time, we are operating in the European market from Luxembourg. We have educated the local regulator, and we are quite open to share them because this market is evolving constantly, right? A lot of things, like for example, when we started in 2018, there was no Bitcoin layer 2. There was Lightning, Liquid, and all these discussions that were happening. This is happening today. And now people are understanding, right? But for a long time, we went through the journey. We educated the regulator, and we're happy we did it, because that gave a lot of comfort to our users who are using the platform, deploying good amount of money on the platform, and they're also returning, right? Because when the Bitcoin price was, let's say, 5K or 1K or $200, the magnum of this market was small, right? But now as we are 100K plus, we will see a lot of institutional money coming in, and they will ask questions that are very logical because there may be pension fund is investing, right? And you want those kind of players to have a proper answer and proper documentation, everything, and their regulation and regulatory processes became very important. And that's what we are following. But we are trying to also keep a balance, right? It should not be a senseless regulation, right? We are open to give up as long as it protects the logical necessity or logical need of any market.
Yeah, no, that makes sense. And you mentioned education a lot. That has been an incredibly important part of the entire journey of Bitcoin until we are now, right? It's like if you're building these new products, using Bitcoin, you got to be able to educate people so we can wrap our heads around this new arena that we're finding ourselves in. So can you walk us through the life cycle of a tokenized security on Stokr, from issuance to secondary trading? What does that look like?
So this depends on the products, right? There's certain products have a life cycle of 1 year, certain has perpetual. That means there is no maturity, that it can go on forever till the time there is a financial incentive behind it. Or there is a product like the Blockstream mining node, which is currently has a 4-year maturity, right? So we usually structure it in a 3-phase. You have the creation phase where the securities are being created, how many total tokens will be in circulation, what will be the maturity, what will be the price, who can subscribe, who is issuing, all these kind of things, right? The second phase is a life cycle. The life cycle is during the process there can be interim dividend, right? Does the dividend is paid in Bitcoin? If it's paid in Bitcoin, is it in the Bitcoin wallet? Because we issue securities on the Bitcoin wallet, so you can, on the same wallet, you can get your securities and the dividend, but also sometimes you can also get stablecoin Tether as also an interest dividend payment, right? You can also pledge, right? You can actually, we are seeing a lot of borrowing lending happening, right? Against this tokenized securities, and people are kind of lending against it. People are also redeeming. So at the maturity phase, what happens is they give the tokens back and they get the payment back, right? So it's kind of a two-sided flow. The money, one side goes out and the other side, the securities goes out, right? And we are seeing this kind of becoming more and more interesting because this life cycles, a lot of automatization is coming in. And giving you an example here, let's say you are buying today a tokenized securities on Stokr and you have a Stokr account, you want to sell to somebody else, only thing that person need to create is a Stokr account. And you can just from one wallet to another, you can transfer. What we effectively do is we identify the wallets that you are holding and your counterparty is holding, and we KYC them. And then we put in our database, we call it as a whitelist database. What we do is we said, okay, Hank's wallet is verified and Hank's friend X's wallet is verified. Now Hank and X can trade 24/7, 365 days. There is a holiday, right? Even on 4th of July sitting and drinking a beer, you can trade. And automatically the blockchain informs the issuer, hey, now Hank has traded X amount of tokenized shares or bonds with A at 5 p.m. on 4th of July. And this we did not see in the traditional capital markets, right? Because traditional capital market is created from 9 to 5 basis. Only the world only awakens at 9 and closes at 5. But Bitcoin doesn't sleep, right? The financial market today doesn't sleep. The infrastructure doesn't sleep, right? And that's what I think we are quite proud of what we are building and what we have built till date.
Yeah, as you should be. It kind of begs the question for me, though. Why did you choose Bitcoin as your base layer opposed to, like Ethereum or something else?
I get this question quite a lot, and thanks for asking this also, right? For me, it's very important, right? When you're creating a financial assets like capital markets products, like which has a 5 years, 10 years duration, you want that product to be in the market without change. Now, if you go to a protocol that is very new, that coming in, that has been funded by VCs, they're definitely supported by a few market makers. Those market makers can manipulate the token price of the infrastructure. That means a fund that is 10 years can be subjected to a lot of market manipulation on the technology layer, which a lot of people doesn't want. The second is definitely Bitcoin is the most battle-tested infrastructure out there, out of any digital asset. And it's much more decentralized than any other infrastructure that is there. So if you talk about those, Bitcoin really stood the test of the time for years and maybe in the next 50 to 100 years. Then brings me to the third point is how many crypto altcoins we think can survive for next 50, 100 years. I cannot name of any other than Bitcoin, right? So that makes Bitcoin being the obvious choice. And infrastructure that we use is Liquid Network. Liquid does not have a native shitcoin. They use Bitcoin as a settlement currency, right? So in that case, like a lot of those kind of counterparty risks that I just mentioned goes away, and you can create an infrastructure for a long term. And that's the reason, like, we are also very much excited to look into Lightning with Taproot assets and RGB and everything, because we believe the capital markets will be fundamentally moved to Bitcoin infrastructure, and we will build that on top of it.
Yeah, that makes sense. Another question I do have for you is, how do you strike the balance between crypto native innovation and institutional grade expectations, right? Because it's like Bitcoin is freedom and innovation, but then we also have to acquiesce to the rules of the laws of the land. How do you balance those things when you're innovating?
We are doing it for last almost 7 years now, right? And we have kind of found our own way, right? As I mentioned, right, the innovation should be responsible, but on the other side, the compliance also should be responsible, both sides, right? We try to balance, right? And I'm very fortunate to have a team who understand that and who has the ethos, right? We are a very, I would say, efficient team, and we understand who are our users. And Stokr has also a lot of Bitcoiners, right, who understand the principle, right? So we do not take it just for granted because, this has been written by somebody from a different world, right? Or this text or legal text. We try to, understand, does it really apply? And we have a dialogue with our regulators, with our, counterparts, with our service providers very closely, quite a lot, because that's where the education comes in, right? You have to educate both the side, right? And this is a constant process. So that's hard to balance, but I think that's what meant by when you create a new industry, right? You cannot avoid that, right? We are not kind of, duplicating an infrastructure that is there for hundreds of years. We are creating a complete new infrastructure, complete new, I think, settlement structures built on some core fundamental human principles that is valid for last thousands of years.
Okay, yeah, no, I appreciate the explanation of that. And Stokr right now, correct me if I'm wrong, supports both crypto and fiat payments, correct?
Yes, we support both stablecoin payments as well as Bitcoin payments, as well as fiat US dollar and euro.
Are you seeing more volume come from the traditional world, or is it the crypto native crowd right now still in the lead? I would assume.
So we have actually very interesting audience on the platform, which are institutional players, but they're comfortable on stablecoins. So we see more volume in stablecoins and Bitcoin than fiat. And that's the reason when I said we have a lot of contrarian users, right? Entrepreneurial users who are kind of not taking everything for granted. They just did not take the system for as it is, right? They're questioning and they're responsibly innovating also, right? And these players are also pioneers of their own field, but they're also trying to understand money and they're trying to understand, the implication of Bitcoin in the space. So we're quite fortunate to have that audience who understand stable coins, who understand the value proposition of stablecoin, the value proposition of Bitcoin. And there's a reason we are getting more of those kind of players on the platform.
Interesting. And what kind of assets are you finding right now that people are the most interested in tokenizing? Is it real estate, funds, bonds, maybe something else?
So on Stokr, we are kind of looking into more Bitcoin derivatives and Bitcoin structured products, right? When I say that, it's kind of products that provides a Bitcoin denominated return or product that appeals to the Bitcoiners. We recently announced a partnership with H100. It's a European Bitcoin treasury companies. It's one of the European Bitcoin treasury company roughly holding 250 around BTC. And we are helping them to issue a convertible note that converts into the stocks. But the convertible notes, one interesting angle, it will be issued in tokenized format and investors can subscribe with the BTC. So imagine it will be like you invest one BTC, the one BTC does not get converted to the stocks till the time the strike price of the stock is reached. If the strike price is reached, the Bitcoin gets converted to the stocks and you get it. If the strike price is not reached within a maturity period of certain months duration, you get your BTC back. So if you're a Bitcoin minded investor, your one BTC still stays one BTC. It's an interesting financial innovation, but this kind of product can only survive in the market, which is trying to create a Bitcoin denominated product like a Bitcoin treasury company. And that's what it works.
Interesting. During your time, or during Stokr's time here, what's the most exciting tokenized product that you helped bring to life so far, in your opinion?
Till date, I think the most exciting one is the tokenized Bitcoin mining hash rate. This is like I'm always say, the hash rate. What is a hash rate is a very abstract concept, right? It's kind of a capacity to mine Bitcoin, but hash rate is a derivative of energy because you need to mine. It's a derivative of access to ASICs, facilities, geopolitical risk, because if you're mining in a region which is in sanctioned jurisdiction, you cannot mine because you cannot import ASICs and all these things. So the hash rate is kind of derivative product. And when you give access to, let's say, you buy a securities that give 1 petahash, that is that's the hashing capacity or hash power, and the global hash rate is volatile, you as an investor, let's say you have a right to whatever Bitcoin is mined, your actually Bitcoin mining can be volatile. And what we have seen in the Bitcoin mining history, during any halving cycle, there is always certain duration where mining is more profitable than buying on spot. So if you want to get the benefit of those phases, you need to mine for 4 years for the full halving cycle. That's the reason the BMN hash rate kind of product we have actually launched on a cycle. So the last cycle we launched was 2021, matured in 2024. That was a 3-year product. But this one, the BMN2 we launched in 2024, that will mature in 2028. So we take the full halving cycle from 2024 to 2028. And this is an interesting instrument because I have not seen, and when we started structuring that with Blockstream mining and with Adam Back, who was kind of the proponent of, and it was actually kind of his brainchild to launch this product. It was fascinating product, right? It's so simple, yet so complex, yet so deep in understanding of Bitcoin, right? And I love how you say always Bitcoin is a hurdle rate, right? And this product was created actually to can it outperform Bitcoin? Can it outperform Bitcoin buying on spot or buying on dollar cost average? And we gave our investors, or the Blockstream mining product gave their investors quite some fantastic results. And we are quite proud to, to support this creation of this product and also kind of maintaining, and in the growth phase also, we are supporting heavily this product.
Amazing. And as you scale toward your next goal of $10 billion, right, in tokenized assets, what are the top priorities for Stokr in the next 12 months so that you can get there?
I think we are trying to identify the products that are, as I mentioned, right, we really try to listen to the market, and we listen to the market what they're looking for, right? So we are listening what kind of products the market is looking at the moment in terms of Bitcoin derivatives and structured products. And we would like to partner with other players similar to Blockstream mining, similar to H100, to create innovative financial product that can actually give a fantastic product for the investors and the audience in this current macro environment. And I think there is a huge amount of opportunity, that is coming on our way, right? Because the Bitcoin is shown that this will be there. Bitcoin will be there as a store of value. As more and more we are kind of going to the phase where politicians are fiscally irresponsible. They are not caring about inflation. They are only caring about printing so they can fulfill some of their, election promises rather than trying to be fiscally, I would say, disciplined. The Bitcoin will rise in value. It's not Bitcoin is rising in value. It's the fiat is decreasing also on the other side is in value. And if it's going in that direction, we will have more of these kind of innovative financial products. But on the other side, we are also seeing a lot of traditional players, right? BlackRock came with tokenized money market fund. We are seeing similar kind of players are also coming to the space, because if we are thinking of the stablecoin market will be few $1 trillion, this will actually flow to tokenized securities market. We now saw Robinhood right now announce that they are kind of bringing tokenized stocks on their place. Kraken announced. So I see there is a huge market momentum. The last 7-8 years was kind of defining the market, defining the ecosystem, educating the regulators, educating the players. But I would say the next 5-6 years or 10 years, this is the place to scale, right? Where we see adoption not only growing from high net worth investors, family offices, risk takers, contrarian players, but also coming from institutional investors. And that's what the Stokr is building at the moment for.
Interesting. And if we scale back even further, we talked about the next 12 months. If we scale back 10, 20 years from now, what does success look like for Stokr long term? Like, do you envision being the NASDAQ of tokenized assets or something entirely new and different?
The thing is that it's completely a blue ocean territory for us, right? What we're building. So it's very hard to define some reference point. But what I always like to say, we are investment banking with a tech. That's maybe easier way to explain. But what we are what we are very proud to actually build is creating the basic Lego blocks, a principal Lego blocks that will create an institutional grade infrastructure. But on the other side, a DeFi infrastructure that is built on top of Bitcoin, meant for all, not just few market makers can make money out of each other, but kind of an accessible marketplace, right? For that, we need the right products in the building blocks. For that, we need the right infrastructure in the building blocks. We need right distribution, right regulatory, all these things, right? And this is what is happening. So I would say next 15, 20, 30 years, what we are creating is evolving the NASDAQ, because NASDAQ did not evolve for a long time. Dematerialization was the last evolution of capital markets in terms of settlement. And now we're moving from dematerialization to tokenization, and Stokr is one of the pioneers of that evolution.
Yeah, oh, absolutely. And where do you think the biggest tokenization use case will emerge first? Is it going to be private equity, public markets, real estate, or maybe something else?
The biggest, I think, still see is stablecoin. So that's the first biggest use case of tokenization. The second will be the private credit, because that's a huge market which people doesn't see, but it's under every capital markets is a private credit. So I see the private credit, fixed income products. This will be one of the, I would say, the products that people, because we need to see where tokenization can really add value. Wherever there is inefficiencies, in the public stock market, you have T+1 at the moment. So the places is 2+2, T+2, T+3 are there. But a lot of OTC market in private credit is maybe T+7 or T+5. There I see a huge adoption capacity. The second is making it accessible to emerging economies, right? Across border emerging economies. That's what I see. A lot of PE funds, private equity, hedge funds, and all these kind of players can be unlocked. I saw a lot of experimentation on tokenized real estate. I'm not super bullish on that. I'm yet to see quite some growth in that direction, but I'm much more excited about private capital markets and getting it unlocked. And maybe we see also capital markets denominated in Bitcoin going forward, right? Where the fund managers of performance will be denominated in BTC. If they can outperform Bitcoin, then only they get paid the performance fee. If not, they do not get paid. And we would like to have those kind of products actually on the platform, because that's what I see the market is heading, as Bitcoin is a hurdle rate.
Yeah, and as tokenization, it definitely feels like it's gotten a bit of a buzzword status as of late. What are your thoughts on BlackRock and other TradFi giants diving into tokenization? Is that validation or is it co-opting?
I think it's both, right? I would say they understand that, let's say, for example, you are holding a treasury bill as a hedge fund for 5 hours. You will not get interest rate hourly basis. In traditional market, you cannot pay interest in hourly basis. It will be back office nightmare, right? But when you tokenize the fund, and you can actually tokenize the fund units, you can airdrop on the blockchain wallet on an hourly basis, and it can be automated very easily, right? The amount of automation excellence that can come in this kind of funds, this is where the market is heading. I don't think the tokenization will be adopted because of some cost saving, but it will be adopted much more for efficiencies. But another interesting, I think this is kind of, I always discuss, in some of my peer network, is when we talk about AI agents or AI infrastructure, right? Those AI agents will be perfectly capable of managing a private public key, rather than ourselves or grandmother and that side of the audience, right? Now imagine you can actually have some AI agent that is managing your portfolio, and you give them some direction, is what kind of returns you're looking for, or maybe what is the purpose? Is it the purpose to get some educational qualification at a certain age, or retirement house, or whatever it is? And they can actually create a strategy, and they can interact with these tokenized securities. So I would say that market will unlock a huge benefit of tokenized securities, because then you can go very granular. You can do a number of strategies, and you're interacting effectively the token, which is the digital asset. And the AI agent is also a digital agent. So that can interact perfectly in the market.
Interesting. Well,
that's a very
we're running out of
futuristic
time here, Arnab. I know. Yeah, I know you're a busy guy, so we got one more question I would love to get your thoughts on, and we'll let you go. We certainly appreciate your time this morning. 2025 has been an interesting year for Bitcoin. And I'm curious as to what excites you the most about Bitcoin's current momentum? What still worries you? And with that in mind, where do you see Bitcoin's price headed in the next month and by the end of this year?
Let's talk about the excitement first, right? What excites me is education, right? The education about Bitcoin, I'm seeing more and more contents are coming, which are discussing about the principles of Bitcoin, which is not about talking about the pricing, where it is heading and all this kind of direction. And the Bitcoin is not just a pump and dump game. It's not like, get rich quick asset at the moment. It's much more to create a generational wealth. So that's why the direction is very much making me positive, because we are getting a lot of hodlers of Bitcoin which are looking for 5 years, 10 years time horizon, not just, hey, Bitcoin is moved by, a few bips, why not sell it and get out, right? What worries me? Definitely regulatory challenges, right? I understand to a certain extent we will come to a phase where the fiat currencies will be in question, or fiat currencies will be in a huge crisis. Now, how the regulators will treat those fiat currencies, right? Because on the other hand, we're talking about Bitcoin ETFs, we're talking about Bitcoin treasury, we are talking about strategic Bitcoin reserve. What will be the impact of government when they have those kind of things? This part I'm not clear, right? It's like giving, some juggernaut a weapon and you do not know what will end up. But eventually, I think the market, what I believe in Bitcoin is a free market economics, right? Bitcoin has always shown the free market finally wins, right? And the crypto is a fundamental place where we saw the free market, how Tether, right? Tether being one of the prime free market, I would say, proponent as well as beneficiary of the free market, is they won as the largest stablecoin, not because some regulators say they are the best, but because the free market chose. And Bitcoin is actually also kind of the this free market adoptee in that sense, right? So I'm quite bullish on that side. So the free market will find its own way and rectify and correct itself.
Yeah. So what do you think? The end of the month, what do you think? I know it's always hard to place price predictions for the end of the month. End of the year, though, I love the predictions. Everybody loves them. What do you think? End of this month, what could we be looking at? End of 2025, what are your thoughts? Of course, not financial advice to anybody out there. These are just your thoughts and opinions.
Exactly. It's not any financial advice. And what I personally feel is that 200,000 is very, very possible in this 2025 cycle. We have to see different macro indicators, but given the fact that Trump is going for money printing, and we will see a rate cut, and if not a drastic rate cut, if that in this direction goes, definitely we are going at around 200K. But I am also kind of seeing today, if you see, there's some large Bitcoin wallets started selling BTCs. And if that starts getting unlocking quite a lot, we also have a lot of sell pressure. But let's see where the market heads. What I will be really afraid to have huge amount of paper Bitcoin, which was quite a lot of case when the FTX and all this collapse happened. But if that's not the case and the market is purely relying on demand and supply, I think 200,000 is very possible this year.
Love it. If it gets to 200,000, I'm picking you up in my new Lambo and we're going for a cruise down the PCH1 in California. Love it, Arnab. Well, thank you so much for your time today. It was such a pleasure to chat and learn more about you and all the incredible things that you're doing over at Stokr. For our audience out there, I'm sure they're listening. They're like, hey, we want to learn more about everything that Arnab and Stokr are doing. What's the best place that I can send them so they can get more info about you?
So you can follow me on Twitter, and you can actually go to stokr.io, stokr.io, and register to our newsletter and follow up what we are doing. And we are happy to, share more stuff that we are doing over the time.
Love it. Well, when you guys hit that $10 billion mark, I'm having you back on the show to talk about it. So thank you so much for your time today. I hope you have an amazing weekend. And it was a blast. Thanks again.
Thanks a lot, Hank. Thanks for having me.
Pleasure was all mine. All right, we're taking a break. When we're back, we're going to continue with more of this morning's bull run. So stay tuned so you don't miss the top stories of the day. We'll be right back. All right, we're back with this morning's bull run. A quick thank you again to Arnab Naskar of Stokr for joining us in the studio today. Make sure to take a look at what they're doing over at Stokr. It's pretty wild stuff, so you don't want to be left behind. Take a peek. All right, back to the news. Crypto quant analysts have answered the question every Bitcoin holder has been silently screaming into their portfolio. Why isn't Bitcoin pumping right now? Well, it turns out it's not a supply problem, it's a demand faceplant. According to a recent report, Bitcoin demand across the entire market has cratered, dropping by 895,000 BTC in just the past 30 days. Yeah, despite all the noise about ETFs and our Lord and Sailor, Michael Saylor, buying up Bitcoin dips like they're on clearance, the actual market-wide appetite for BTC has collapsed harder than your meme coin bag. ETFs were buying 86,000 Bitcoin over a 30-day window back in December. Today, that number is down to 40,000. And Sailor's MicroStrategy purchases, well, they're down about 90% from a monster 171,000 BTC in a month to a modest 16,000. But here's the real kicker. Even those big institutional buys were only ever about a third of the overall demand. You see, back on December 7th of last year, total market demand grew by 771,000 BTC in just 30 days. ETFs and Sailor were responsible for roughly 33% of that, meaning the invisible retail and whale crowd carried the rest. Now, that crowd's gone fishing. CryptoQuant reports that the total net contraction in demand over the last month is 895,000 BTC, more than wiping out any positive impact from ETF or corporate buying. Now, zooming out, the 12-month picture is just as bleak. Annual demand fell by 857,000 Bitcoin. Meanwhile, ETFs added 377,000. Strategy added 371,000. Net, the market is still short. Now, the analysts, they make it pretty clear. Institutional buying is helpful, but it's not a cheat code. Without broader market demand, price goes nowhere. And right now, that demand is AWOL. Bitcoin's fundamentals are still strong, but until the rest of the world shows up again, we're consolidating, not mooning. Sorry. Now that Trump's budget bill is headed for his signature, House Republicans are kicking off something called Crypto Week. No, it's not an influencer campaign, thank God. It's real, and it starts mid-July. Speaker Mike Johnson and committee chairs French Hill and G.T. Thompson say the week of July 14th will focus on 3 bills. First up, the Genius Act for stablecoins, the Clarity Act for crypto market structure, and a bill to block the Fed from issuing a CBDC directly to individuals. So basically, stablecoins, clarity, and don't let the Fed become your wallet app. The Genius Act, which already passed the Senate, would force all stablecoins to be fully backed and regularly audited, especially those with market caps over $50 billion. It also lays out rules for foreign stablecoin issuers. The House had its own version called the Stable Act, but now they're pivoting to the Senate version to get something on Trump's desk by August. Then, of course, there's the Clarity Act. This one sets the regulatory turf war rules between the SEC and CFTC. It also forces crypto firms to separate customer funds from corporate funds. You know, basic grown-up financial hygiene. And finally, the CBDC ban. Representative Tom Emmer wants to make sure the Fed can't issue a government coin that lets them track your every dollar. Supporters say these bills represent the U.S. finally taking crypto seriously. Critics, mostly Democrats, say it smells like Trump trying to pump his own portfolio, which for the record, Bloomberg estimates has made around $620 million off various meme coins and DeFi projects. Still, if these bills pass, the U.S. might finally stop being the crypto world's regulatory punchline. And that, my friends, would be bullish. And in other news, Senator Cynthia Lummis, well, she's tired of waiting. After crypto tax provisions got left out of the big, beautiful bill, she dropped her own, a standalone crypto tax reform bill, because someone in Congress still believes in fixing broken things. The bill proposes a de minimis exemption for capital gains under $300, with a $5,000 annual cap. So if you spend Bitcoin on dinner and make $2 in the process, the IRS no longer cares. It also proposes deferring taxes on staking and mining rewards until they're actually sold, not when they magically appear in your wallet. And crypto used in charity? That's tax-free too. The bill even carves out an exemption for crypto lending agreements. Lummis called it a common sense legislation that reflects how digital technology, there she is, that's terrifying. She calls it a common sense legislation that reflects how digital technology works in the real world, which might be the first time Congress and common sense were used in the same sentence. The bill comes amid rising frustration from the crypto community over unclear and outdated tax rules, particularly for DeFi protocols that aren't run by companies and don't touch customer funds. See, back in June, lawmakers added an amendment to the Clarity Act that would exempt those protocols from being treated like money transmitters. But that only solves part of the puzzle. Lummis's bill is trying to do the rest. Because if the U.S. really wants to be the leader in Web3, it might want to stop treating every crypto user like they're committing tax fraud at Starbucks. And our Lord and Sailor Michael Saylor, he's back in the cockpit again, and this time he brought Photoshop. Saylor tweeted an AI-generated image of himself. Hey, Mike. An AI-generated image of himself as a fighter pilot suit, complete with orange Bitcoin insignias, captioned, "Let's go faster," which, knowing Saylor, probably means he bought another 8,000 Bitcoin and dared the market to blink. There it is. Boy, that guy makes more Photoshop, like AI photoshopped images himself than like most teenage girls. Now, the post came as Bitcoin floated just under 110K, and as his company's strategy announced a modest little Q2 win, $4.4 billion in Bitcoin gains. That's a 41,407 BTC haul in just one quarter, a 7.8% yield just from holding Bitcoin. Year to date, the company's BTC yield is up nearly 20%. And strategy isn't alone. According to CryptoQuant, 51 companies now hold 848,902 Bitcoin in total, but over half of that, more than 424,000 Bitcoin, belongs to strategy. So, yeah, Saylor is still the top gun of Bitcoin accumulation, as the picture clearly shows. MetaPlanet trails in fifth place with 13,350 BTC, and more companies are starting to copy the Saylor playbook. Raise capital, issue securities, buy Bitcoin, and repeat. The 2025 trend isn't launching tokens, it's converting public companies into Bitcoin vaults. So while Saylor memes from the stratosphere, the strategy's balance sheet keeps rocketing. Let's go faster, indeed. I feel you, Michael. And Peter Thiel, he's back with another headline that sounds like the start of a Black Mirror episode, which is totally on brand for him. He and a few other billionaires are reportedly launching a new bank to replace the crater left by the collapse of Silicon Valley Bank back in 2023. The name of the new venture? Erebor. Yes, like the mountain from The Hobbit, a dork. Now, because apparently nothing screams financial stability like naming your bank after a fire-breathing dragon's lair. Now, according to the Financial Times, Erebor will focus on serving crypto companies and early-stage startups, you know, the exact type of risky business that traditional banks are now terrified of. Thiel's Founders Fund is one of the early investors. He's joined by defense tech cowboy Palmer Luckey and 8 VCs Joe Lonsdale, because if you're going to create a crypto-friendly bank in this economy, it helps to stack the board with people who build weapons, fund libertarians, and once co-founded PayPal. Erebor has reportedly applied for a U.S. bank charter, which would give it actual bank powers, not just fintech cosplay. It wants to serve startups that have been boxed out by tighter regulations, and crypto firms that got ghosted by the old banking system after Signature, Silvergate, and SVB all died horrible deaths in 2023. Now, let's not forget, Silicon Valley Bank served half of all venture-backed tech and life sciences startups before its collapse. It was the go-to bank for crypto-adjacent capital. And when it went belly up due to rising interest rates and some truly awful risk management, it helped trigger a mini banking crisis that also took out Silvergate, Signature, and First Republic. Now, Thiel and co. want to fill that vacuum, and they're doing it loudly. This comes as Thiel also backs Bullish, a crypto exchange currently eyeing a US IPO. So yeah, he's not quietly bullish on Bitcoin, he's aggressively doubling down. Now, if Erebor actually gets its charter and launches, it could mark a major moment for crypto banking in the United States, an on-ramp not just for digital assets, but for venture-backed innovation that's been frozen out of traditional finance. And while this probably won't move Bitcoin's price immediately, it does signal that heavyweights with deep pockets and high risk tolerance still see crypto and early tech as bankable, quite literally, which in post-Silicon Valley Bank world is a pretty bold move, but hey, we'll take it. And if you thought ETFs were leading the charge on Bitcoin accumulation in 2025, you need to think again, because according to new data, public companies have absolutely smoked spot ETFs in the first half of a year. Public firms added 245,000 Bitcoin to their balance sheets between January and June. That's more than double the 118,000 BTC purchased by ETFs. It's also a 375% year-over-year increase for corporate buyers. Meanwhile, ETF purchases dropped 56% from H1 in 2024, despite rising fund inflows. Or in other words, companies are buying Bitcoin directly now, and they're not waiting for BlackRock to do it for them. There are now 254 entities holding Bitcoin. 141 of them are public companies. That's up from 67 at the start of the year and 79 at the end of March. That's a 140% 6-month surge. And while Strategy still leads the pack with 135,000 BTC bought this year, its dominance is slipping. In 2024, Strategy accounted for 72% of corporate buys. Now, that number is just 55% because you got new players in the mix like MetaPlanet, GameStop, and ProCap, and they're all jumping on in. This new wave of direct accumulation could trigger a supply crunch, especially with the next halving on the horizon. I mean, we're talking less issuance, more demand. You do the math. Now, analysts warn that this combo could send Bitcoin's price vertical in the back half of the year. So while ETFs are slowing down, public companies are quietly stacking. And the battle for the remaining Bitcoin just got a lot more interesting. We're going to take a quick break, but when we're back, we're going to blockchain without borders because some stuff is going on in Brazil, and you're going to want to know about it, and it's not soccer. We'll be right back.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
All right, welcome back. It's time for a little blockchain without borders. And right now we're talking about Tether, the stablecoin giant that people either love or fear or pretend to understand is now dipping its toes into Bitcoin mining in Brazil. The company signed a memorandum of understanding. Not a real investment, more of a let's wait and see what happens kind of relationship with Adagragro, a renewable energy firm in Brazil. The plan here, explore the possibility of using Adagraco's massive 230 megawatt power infrastructure to mine Bitcoin with clean energy. Now, Tether isn't cutting a check just yet. They're mostly supplying software, infrastructure know-how, and apparently the vibe of a company that's still banned in Canada but bullish on Brazil. Now, according to Adagraco's CEO, the idea is to stabilize their energy sales and gain exposure to Bitcoin without selling power at spot market rates. Or in other words, instead of selling energy to the grid, they might plug in a few ant miners and start stacking sats. The partnership will use Tether's mining OS to manage operations across several sites. It's experimental, it's strategic, and it's happening in a country that's super crypto-friendly, except when it isn't, because Brazil recently hiked crypto taxes and could add more mining fees later on. Still, this isn't about profits yet. Tether wants to learn how to embed itself into existing infrastructure, and this might help them figure out how to scale that globally. Now, as for Adagraco, well, they're eyeing Bitcoin as a hedge and as a new way to monetize excess energy. It's not a massive operation, but it could mark the start of something much bigger. So yeah, Tether is in the mining game, and if this experiment works, don't be surprised if they go from we're testing the waters to we own the pool. And in other news, a Belgian court has sentenced 3 people to 12 years in prison for kidnapping the wife of crypto investor Stefan Winkel, because apparently being married to someone with a Ledger wallet now qualifies as high risk. You see, back in December of 2024, the suspects abducted Winkel's wife outside her home, forced her into a van, and demanded a crypto ransom. Police, alerted by Winkel, chased the van and stopped it with a risky maneuver, which is Belgian legal speak for fast and furious, Brussels drift. I love that image. Now, the kidnappers were arrested and the victim was freed, and then the court added an extra insult by ordering them to pay over €1 million in damages. But here's the kicker. The masterminds behind this plot, they're still out there, unidentified and possibly still watching. Spooky. Now, the defendants claimed they were forced into the crime under threat of death. The court, however, they didn't buy it. Also involved, a minor being handled in juvenile court because apparently no one's too young for a crypto side hustle. Winkel runs several crypto education platforms, including Crypto Academy and Crypto Sun. His YouTube channel has about 40,000 subscribers, but after the incident, he and his wife were so shaken they reportedly had to relocate. In a January post, Winkel said, "I consider myself a defender of freedom, but I now realize that safety must become an absolute priority." Or in other words, no more flexing your wallet address online, fam. He returned to YouTube in June with the new approach. No more contests, no more on-camera appearances, voiceover only. Winkle's story is part of a disturbing trend of crypto-related kidnappings we've seen as of late. And it's a reminder that public-facing crypto investors aren't just internet personalities anymore, they're targets. And in a world where someone might trade a hardware wallet for your safety, anonymity is the new alpha. We're taking a quick break, but when we're back, bullish, bearish, or BS, and we're going to wrap up the week. We'll see you in a sec. All right, welcome back. It's time to wrap up today's show. And this week, with a little bullish, bearish, or BS, we're going to recap today's top stories and decide if today's looking good, bad, or maybe something else for our beloved Bitcoin. Our first story was CryptoQuant says Bitcoin demand dropped by 895,000 BTC in 30 days. Now, despite ETFs and Michael Saylor buying like it's Black Friday, overall, Bitcoin demand has collapsed by a lot, and in just 1 month. Retail and whales, they have seemingly vanished. And that's a bearish narrative, guys. I mean, unfortunately, without retail or broader demand, institutional buying is a Band-Aid on a broken leg. Bitcoin needs fresh capital to climb, and right now, the crowd's ghosted. Expect more sideways chop in the short term. Retail's on vacation, and until they're back, so is this rally. I'm bearish. Next up, we have Arthur Hayes says Trump's budget bill could send Bitcoin to 90K in the short term. He's saying that the U.S. government will suck out liquidity from the market to refill its coffers, dragging risk assets with it, including Bitcoin, and it'll all go down temporarily before our next leg up. I'm bearish on this one too. I mean, debt-driven liquidity drain equals short-term sell pressure. And yes, long-term, we are still going to the moon, but don't be shocked if we get a patriotic flash crash first. Debt boom now, dip later, but it means bearish in the short term. Ooh, too bearish to start. This isn't great. Next story, we have Fidelity says Bitcoin could anchor a new world order as Jurrien Timmer sees Bitcoin replacing gold as the dollar weakens and global markets shift toward alternatives. Thank God. This one is bullish. I mean, if a TradFi titan like Fidelity says Bitcoin could anchor a post-dollar financial system, that's not just bullish, gang. That is foundational. Long-term demand, locked in, baby. So Fidelity's bullish, and so am I. Whew. Okay, so right now we're 2 bearish, 1 bullish. Okay, getting a little better. Next up, we have Michael Saylor post a Top Gun meme after $4.4 billion in Bitcoin gains, as Strategy booked nearly $4.5 billion in gains last quarter, and Saylor is flexing in a flight suit. More public companies are copying that playbook, which, of course, is bullish. We're seeing it. MetaPlanet, ProCap, 21. We have these Bitcoin treasury companies all following Michael Saylor's lead and putting BTC on their balance books, because as public companies are turning themselves into Bitcoin ETFs, we're seeing more money go into the system, and as more treasury strategies go full on Saylor, price pressure builds and not in the down direction. So this Top Gun energy is giving me major bullish vibes. Okay, we've evened it up. 2 bullish, 2 bearish, 1 more to go. Last, Peter Thiel is building a new crypto-friendly bank called Erebor, as him and his friends are launching this bank for crypto startups, hoping to replace the void left by Silicon Valley Bank back in 2023, also Silvergate and Signature, not to be ignored. I don't love Peter Thiel, but I'm bullish on this. The reason being, if Erebor gets its charter, crypto firms finally get a banking lifeline. It won't move Bitcoin's price today, but it is a major long-term infrastructure overhaul for the next Bitcoin cycle. So a real crypto bank, how can you not be bullish on that? So today's scorecard, it was a tight one. 3 bullish, 2 bearish, no BS, which means today's verdict, we snuck by as bullish, just barely, because despite some short-term headwinds, there we go, the long game remains looking strong, with TradFi embracing Bitcoin, corporations doubling down, and crypto banking rising back from the ashes like a phoenix. We're consolidating with conviction here. Well, that wraps up this week of the Blockchain Report, fam. As always, thank you so much for tuning in and joining us each and every weekday morning at 8 a.m. PST. We go for 2 hours almost every day now, and we're bringing you some of the top people in the space to interview and find out what's going on so you can stay abreast and plan your Bitcoin strategy appropriately. We're all our own Bitcoin treasuries now, so you're going to want to make sure you're on top of this news each and every day because you don't want to miss out and be the one left holding the bag. As always, thank you for watching. Make sure to like, follow, and subscribe to RoxomTV and Hank at RoxomTV on all platforms in the world. It's the 4th of July, it's freedom, it's America, it's burgers, it's fireworks, and it's your financial sovereignty. Happy 4th to all of you out there, and I can't wait to see you on Monday for more Blockchain Report. Enjoy your weekend, and stay safe. Stay away from those firecrackers out there. Blow your hand off. See you next Monday.